This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today for our program. I am Cesar Delgado for you on Back Roads of Illinois. The weather is turning out colder on January and February as well. How about grazing with this cold weather? He's the beef specialist for the University of Illinois Extension is Travis Meter. The world's supply and demand in the past from the Department of Agriculture and the data dump on the report. We were talking about the fundamentals with these grains and what's impact on the planting intention report. We were joining with Ryan Wanger from Bolt Marketing LLC. This been Back Roads of Illinois. World supply. Uh, The weather is turning out colder in January and February as well. How about grazing with this cold weather? He's a beef specialist for the University of Illinois Extension is Travis Meter. Hey Travis, how are you with the cold weather?
Caesar, good to be with you. Yes, the cold weather is definitely dominating, I think, all cattle producers' days right now. So when the weather gets cold like this, it does increase the amount of chores and time that we spend with the livestock because we're not only making sure that they're comfortable by providing some bedding or making sure that they have windbreak or shelter, but we're also many times checking waters to make sure that they're thawed and that our water supply is adequate for cattle. And we're, in all likelihood, we're also increasing slightly the amount of feed that we're providing to these animals because they'll flex their intake, they'll increase their consumption of feed, and many times they'll need a little more energy to meet the maintenance requirements of the cold weather.
How is the water pump with the weather?
Yeah, so a lot of cattle are watered off of natural sources, so creeks and streams and ponds, lakes, and so we've been so dry in many parts of Illinois through last fall and early winter that some of those flowing water sources aren't available. So we probably have issues with making sure that we've got like well pumps and supplied water to cattle. Chopping ice on ponds and lakes is pretty common, but the infrastructure for water supply for cattle, a lot of times if we've got hydrants or automatic waters, they're a very good piece of equipment to help water cattle, but at times, especially with these negative temperatures, may require some maintenance and thawing out. So if a hydrant freezes or we get a water line that freezes, we have to just go in and do a lot more maintenance to keep those waters free. There are some automatic waters that are heated via, like an electric heater, or some just utilize like a tube in the ground for geothermal heat. And that helps. But in many times we have some ice on top of those water tanks that we have to bust and open for cattle. So it just makes for a little longer day. And when a hydrant freezes or we have an automatic water that's froze up, that can add a lot of time to a cattleman's day, just making sure that that water supply is thawed out and that the maintenance is correct on that equipment and those facilities.
How do we continue to fix the water pump when it is broken?
Yeah, so a lot of times the pumps are submerged in water, at least like I'm thinking about in a well. So submergible pumps a lot of times are not susceptible to freezing. It's more the water line that we have problems with, and especially the lines that come up to a hydrant or lines that come up to those automatic water sources that are not buried as deep as maybe our like supply water lines. So as far as thawing out, it's really that where that water line is and connecting to those hydrant or water sources that gets to be and here again, there's lots of different ways to do it, but we've got to get some kind of heat on those lines to thaw them out.
Well, Travis, cattle liken the snow out of the field. How can we help with the feed on the pasture with the Midwest cold winter?
That's a good question, and I think at this juncture, we've a lot of cattle are probably some are maybe still out grazing some corn stalks and some stockpile, but for the most part, we're feeding harvested feeds to these cattle, whether it's hay or silages, and then other ingredients. We have several byproducts that we like to incorporate into rations, and then obviously grains. But what producers tend to do during these colder temperatures is we want to make subtle changes to the ration. So if our cattle are eating a hay-based ration, we could provide some grain and protein supplementation. One of the neat things about cattle is that fermentation that occurs in the rumen actually generates heat. So one of the best things we can do for cattle that are out still, in the environment where there is some cold stress, is make sure that they have adequate fuel for that fermentation vat. So we need to make sure that they've got good quality feed and forages so that that fermentation can be efficient and occur. And then that fermentation that occurs in the rumen does generate some heat for the animal. So it's almost like a built-in heater for a cow if we've got good forage availability and good rumen fermentation.
Do you recommend for other feed?
Okay. Yeah, so I think there's lots of actually one of the blessings of being in Illinois is that we have a tremendous amount of different feedstuffs available to us. So I think the most common feed stuff for most beef cows on the cow side would be hay. And so that we have pretty adequate hay supplies this year. I know that with the corn prices being lower, there were a lot of cattle producers that chopped some of their corn acres for corn silage, and that makes for tremendous high quality feed for a beef cow. And corn silage is also a pretty common ingredient for our feedlot rations as well. But also in Illinois, cattle have the unique ability to digest a wide array of feeds, and that's because of the microorganisms that really digest that feed stuff in the animal's rumen. So a lot of byproduct feeds like wet distillers grains, wet corn gluten feed, soybean hulls, even waste stream products from human food. So cattle can even eat a small amount of like I guess cookies, crackers, candies, just different products of vegetable waste. There's a lot of things that we can utilize in a cow's diet. I think for right now, with adequate hay supplies and pretty economical grain prices, our rations do look pretty traditional with being like hay and silage, also using those also corn grain and those corn byproduct feeds.
How much of grazing with the feed in the bin on the field with the cold weather?
Yeah, I'd say this time of year, like I mentioned, there's probably not as much grazing occurring now. We like where I'm at, we've got a fair amount of snow cover, and so um, cattle producers are feeding those harvested feeds. I think it's important for cattle producers to consider, how much more feed should they feed during a cold weather. And I think it's just, again, I want to emphasize that we just do subtle changes to the ration. So we don't need to all of a sudden, if we're just feeding hay, we don't need to feed cattle a bunch of grains because that can throw off that rumen microbe population. So we do need to be a little bit careful about, making drastic changes to the ration or shifts I always encourage producers, no matter the time of year, to make sure that they transition those cattle, and make subtle changes to the ration. But green grass will be here before we know it. I know it's hard maybe to see right now with the cold spells that we've had and the snow-covered ground, but it won't be long here in a couple months. We'll start to see the start of grazing season, and cattle will be back out grazing pastures soon.
How about the corn stalks to get more calories burned off?
Yeah, it's a good. I love grazing corn stalks. It's one of my favorite things to talk to producers about. And I think it's a great cost saving strategy. I think the best utilization of corn stalks is right after harvest, so kind of in that late fall period. At this juncture, many cattle that are out on corn stalks currently have probably consumed the high digestibility components of the corn stalks. So the husk and remaining corn grain would be the most palatable, the most nutritious components. And so cattle out on corn stalks, here in the dead of winter, we still need to provide supplemental feed to them because in all likelihood, those corn stalk grazing acres are not meeting their nutrient requirements at this stage of the game.
Markets is in the state of Illinois, nearby Macon.
Yeah, the cattle markets have really continued to impress, I think is the best way to say it. We had a lot of pressure from headlines on cattle markets in the late fall period, and we've seen just ever since we've crossed over into 2026, a lot of optimism in the cattle sector, really in all classes. We've seen feedlot fed cattle prices move, for really been led by feeder cattle prices, kind of coming back and gaining a lot of the gaining back a lot of the ground that was lost late fall. So I think we're gonna go up and look at these highs that we posted last fall and decide whether we want to test those or move back down. I remind cattle producers to take a historical look at this and look back at what cattle prices were a year ago or even 2 years ago and consider some risk management at these levels. I think that we are in a slower recovery, and we are probably starting to save some heifers for breeding, but it takes a while to grow the cow herd. Um, a heifer that's saved and then bred by the time she has a calf, we're looking at a 2 to 3 year interval there, depending on when that animal is bred. So it takes time to turn the ship in the cattle sector. So I think we're in good prices. We got probably a more U-shaped recovery of the cow herd compared to last cattle cycle. But again, I think the take home message for me when it comes to cattle prices is for producers to make sure that they know their break evens, still control their cost, and look at some risk management.
What is your thoughts on this cattle markets for this new year, Travis?
Yeah, I think that well, if I could predict the cattle markets, I'd be in a lot better shape than I am. But what I would say is I think the fundamentals are still going to be really tight. I still think that it's going to take a while to grow the cow herd. We're going to feed these cattle that are on feed right now. They're going to go to record heavy weights. So our beef production numbers are compensated by the fact that we're going to feed these cattle to super heavy weights. So again, cheap grains, high feeder calf prices, all those things factor into making some really big fed cattle.
We wish to have a crystal ball.
Absolutely. Yeah. And the any commodity market has, high prices cure high prices. So we know that. I know that's an overgeneralization, but again, that's what gets me back to making sure that cattle producers are looking at some level of risk management and kind of putting that floor in the market, I think is a good thing right now.
Finally, Do you want to send a message on the cattle grazing?
Yeah, so I guess the last thing I, the last thing I would say, I guess, when it comes to grazing is we've got several different programs. Check out University of Illinois Extension on our website, our Facebook page. We've got several programs coming up yet this winter that people could come out to and take part in our Dudley Smith Field Day, which is really focused a lot around grazing, soil health, and water quality. It's February 10th at the Christian County Extension Office. I'm also involved with the Illinois Performance Tested Bull Sale that'll be coming up in February 19th will be the day of the sale at Springfield. That's the lead off event of the Illinois Beef Expo. And then, yeah, locally, just pay attention. There's several local extension programs that folks may be interested in as well.
Thanks, Travis, for this afternoon on our program.
Yeah, thanks for the invite, Caesar. I appreciate it.
This is Travis Meter, the world's supply and demand in the past from the Department of Agriculture and the data dump on the report. We were talking about the fundamentals with these grains and what's impact on the planting intention report. We were joining with Ryan Wager from Bolt Marketing LLC. Hi Ryan, how are you and welcome to join us for today.
Hi, Caesar. Yeah, thank you for having me on your show and happy to be on to talk markets today.
Ryan, let's talk about the fundamentals with the corn markets for this year. What's your thoughts with the fundamentals on the corn markets for this year?
Yeah, the fundamentals of the corn market are kind of an interesting story this year. I mean, as we saw in the USDA report a couple weeks ago, we have incredible demand right now. That's the good news is our export demand is at a record pace, and we continue to make export sales, and the shipments are on pace for a record export demand. Ethanol is still kind of hanging in there at where we have been the last several years. Feed and residual demand is down a little bit just based on the lower livestock numbers in the country. But the story in corn right now is we have great demand. The problem with that is we also have the largest supply, the largest production of corn we've had in our history too. With 98 almost 99 million planted acres of corn, harvested acreage as a percentage of planted acres as high as we've seen in quite some time, and a record yield. So we are getting rid of a lot of corn. We have great demand, but we have a lot of corn on hand to get rid of too. So, we've had a decent little rally here the last couple days after that report, but that report kind of sent shockwaves through the market with the increased acres and increased yield when everybody was thinking we were going to see a decrease in yield. So it's been a little tough stretch lately for price, but we have been on the rebound here over the last week to 10 days.
What is your thoughts on the technicals buying in play with the corn markets, especially with 186 or
Sorry there. Yeah. The technicals, we saw some good price action today again, especially in the overnights. We rallied and, actually poked back above the 20-day moving average today on the March contract. So back above that 430 level, which is kind of seen as key resistance. If we can continue to rally and stay above that, I kind of like our chances for maybe adding some more price on here too. But yeah, the chart damage done on that report on January 12th is still sticks out like a sore thumb on that report or on the charts. We closed that day down 24 cents, and have since regained back about half of it. So from a technical perspective, we're healing up a little bit here from that day, but we still have some work to do, to get back to those 440 plus levels that we had enjoyed pretty much since harvest ended.
How about the beans markets for this afternoon? Really quick.
Yeah, soybeans have had a pretty good day today too, and we're rebounding even better off that report than we'd have in the corn market. Beans have gained back everything we lost on report day on the 12th and then some, and today posted a new high price since just prior to a week prior to Christmas. So sitting, at 1075 on today's close, we did set back just a little bit after some strong gains overnight and between 8:30 and 9:30 this morning. But beans looking a lot more constructive. We're above some key resistance areas that we were looking at over the past week. So if we can keep some momentum going here and possibly some more positive news on the biofuels front or the trade front with China. I mean, I think we can continue this rally. I am looking at this rally in both soybeans and corn as a selling opportunity, though, here, just because the fundamentals in soybeans indicate that, the demand isn't there like it is in corn. We didn't have nearly the amount of production to work through like we do in corn just because of the lower acres last year because of all the acres that were planting to corn. But ethanol or but soybean exports are, they're still struggling. And we in order to see a sustained rally, we'd like to see those pick up. And at this time of year with Brazil crop coming online pretty soon, that's going to be a little tough to do, at least from the export side of things.
We are waiting for the trade in China for beans. However, we are worrying about some deals that are going to be gone soon as we know it. However, do you think that are we talking to put some calls for the beans Ryan?
Yeah, I think this is probably a good spot to do some hedging if a guy needs to get some done. I mean, we've been selling futures, but with on the option side of things, I think you can look at buying some puts here too. Of course, we have starting next Monday the crop insurance spring price discovery, which is essentially a put on your crop, depending on what insurance level you buy. So it does that will help us if we can stay at a decent price here. That will help us as revenue protection against extreme falling price. But we still have to, that aside, we still have to do a good job of marketing our crop. And I think that, looking at some puts here on new crop soybeans and new crop corn is probably not a bad idea. Old crop, I'd lean towards getting some of your old crop cleaned up here, getting, 60, 70, maybe even 80% sold on old crop soybeans and corn at these levels, because I do still think there is some downside risk here with a lot of headwinds at the markets.
How about some options for the beans Ryan?
Yeah, looking at specific options, anything close to at the money for soybeans, to use some puts as price insurance, buying that 1090, even if you want something a little cheaper out of the money, buying a 1050 put would probably be a good value right here, just to protect yourself against if exports don't continue or don't increase here, like I'm afraid they won't with Brazil new crop coming online. That gives you some price protection because, last time we were in a trade war with China, we did see soybean prices plummet into the $8 and $9 handle. Now, I hope that doesn't happen again this time around, but it's certainly a possibility. So getting some options, some put options bought would not be a bad idea here, in my opinion.
We've been having some news about the job markets is up for this month, especially with the livestock markets for today's market. What is your concern about the economy in general on demand for beef?
Yeah, we had the Fed meeting today, and they decided to leave interest rates unchanged, which, the administration's been pressuring them to lower interest rates. So it'll be interesting to see how the markets react to that. But what is interesting to me is we have the stock market at or near all-time highs right now, but consumer sentiment is not great, and it feels like the middle class doesn't feel like they're doing all that great, even though the stock market and corporate profits are showing that the companies, U.S. Companies that trade on the New York Stock Exchange are doing well. So there's a little bit of uh, a separation there between what's going on with the stock market and how it feels for the economy. Now, what that means for beef demand is going to be a good question. Obviously beef prices are very high right now. But we haven't really seen too many adverse effects of that. I mean, livestock have, after having a sell-off there in November, have recovered almost all of those losses. Feeder cattle margins, or cattle feeding margins are back positive again now after having a scare there towards the end of the year, and but the Packers are not doing as great as they have been in the past either. So I think the administration's stated goal of wanting lower beef prices is always a concern, and what they're going to do about that. But the fundamental picture on the cattle market is we still don't have enough cattle. So I think the market forces are showing that with higher livestock, particularly live cattle and feeder cattle prices recently. So the consumer's ability to withstand these higher beef prices in the long run is going to be tested this year, I think, whether they start to look at alternatives or the price, comes down because of lower demand due to the economic issues. But so far, it has not adversely, except for a short period of time, adversely affected the great livestock rally we've enjoyed here over the last 3 or 4 years.
What is the fundamentals on the cattle markets for today's market?
Yeah, the fundamentals of the cattle market are still very bullish. Had cattle on feed report on Friday that was basically neutral versus expectations, but still showed that cattle on feed numbers are at very low levels relative to past history. So, and that's not going to get fixed real quickly anytime soon. And, there's still the Mexican border is still closed to importing feeder cattle, which has kept feeder cattle prices elevated and kept kept the supply of cattle, especially for those close to the southern border, limited. If and that's obviously due to the screwworm that we've seen in Mexico causing problems. So I don't know if that gets resolved anytime soon, but um, unless something changes there, and we're always subject to headline risk around that, unless something changes there, the fundamentals of the cattle market remain strong.
How about the lean hogs markets today?
Yeah, the hogs have been kind of on a little bit of a similar trajectory to cattle. We had a big sell-off there at the end of the year, into the end of November, and have since recovered and been on a nice upward trajectory. Big, nice V bottom like we see sometimes in livestock, and we've seen the same thing in hogs. We've recovered almost all of the losses that we've seen, off the highs at the end of September in the hog market too. So looking very strong there. Had a little bit of a setback today, but still holding that upward trend that we've enjoyed here since basically the beginning of December, late November. Um, so yeah, the hog market has got a little bit different fundamental picture than the livestock market. They can add and subtract supply from their supply chain a lot quicker, obviously. So we can kind of see some quicker responses to price incentives to expand the herd, and I think we're in a good spot right now. I think hog feeders are are doing all right. We have a lot different market structure too. We've got in the cattle market, we've got, inverted prices with the highest prices seen in the nearby, whereas the hog prices were, well over $100 now for June, and still below 90 for the nearby. So I think this is a good opportunity for producers to get some hedges done on the deferred contracts and hogs right now, specifically out to that June contract.
Of course. Finally, what are some concerns about these prices in the grain sector?
Well, I think our main concern is profitability for farmers at these levels. I mean, even though, like I talked about, we've had a nice rally in soybeans and corn and possibly, a rally that we want to take advantage of, but that still doesn't mean that these are highly profitable prices to sell at. Um, my biggest concern is we're going to be talking about, rather than how much money we can make selling corn and soybeans is just our limiting our losses this year. I mean, we're still below a break-even price on the cash market for a lot of producers out there on both old and new crop corn and soybeans and surely on wheat as well. So I don't see you know, things can always happen that can change these markets on a dime, but I really don't see a huge potential for rallies this year just based on the fundamentals of the market. So that's always a concern of mine is when we're at already break even or below prices and it doesn't seem to be much uh optimism for a rally. That's concerning. So I guess just try to be, diligent with your risk management, take advantage of rallies when they come and it's one of those years where cost containment is going to be a big driving factor, we got to try to get our input costs down, get inputs bought at good prices if you can, and prepaying and things like that to take advantage of discounts because ag retailers are struggling too, and they're looking to you know, give deals to some of their better customers who are willing to commit to them. And so I think there's some good discounts out there for that can be an aid in helping with cost containment this year. But yeah, it's not a great picture out there. And maybe some of these recent announcements around E15 that we're hoping to get year-round E15, that would certainly help. Probably not for this year, but for future years, and it would help the sentiment to see that might be some light at the end of the tunnel for farmers out there. But and then the other thing is the trade issues. We just have to resolve these trade issues. We need to have market access to some of our best export customers, and they're having a tough time trusting us right now, just based on kind of how we've been doing our trade policy lately. Tariffs on one day, off the next day. It's tough to do business in that kind of environment. So hopefully we can get some certainty on the export and on the trade side of things as well.
Thanks, Ryan. I enjoyed our conversation for today. You have a great day.
Thank you, Caesar. Thanks for having me. You have a great day as well.
This is Ryan Wager from Bolt Marketing. This is Back Roads of Illinois. I am Caesar Delgado. You have a great day.